There we go. All right, I think sound is coming through now. Let me know if you guys can hear me okay. I know there's a little bit of a delay. Um, Visually, it's coming through. So I'm going to wait just a second just to make sure you guys can hear. Um, yeah, I forgot NVIDIA updated, and, again, that tends to be what happens. Um, let's see. Hold on. What? No. Camera buds. Give me this. All right, I can see it. I'm gonna start. I guess neuro sleep, another delay is bigger than what it normally is today. Um, like I said, my delay is different than your delay. Anyway, let's go. So in 24 hours, the movement is not there because we've had a lot of retraces, right? A big pop and a big retrace. Things that again we're seeing right now. Obviously, euro pound down 43, but we're seeing in the last 60 minutes it's starting to tick back up, and that's because of the ECB press conference and all the data 30 minutes ago from Lagarde in reference to what's happening there. Now let's rewind back and look and see what we had yesterday. So obviously the Fed funds rate came in at 0.25. Um, no mention of what's going to happen at the next one. Obviously, they're going to be data dependent on things. Very interesting article here talking about this one. Basically, it wasn't so much that they said that they were going to pause. It's just that they removed language that they were going to continue doing kind of what they did, right? Basically, the accompanying statement did suggest this might be the final rate statement by omitting, again, not saying that it is, but omitting prior language that had signaled more hikes ahead, right? They're going to take in various factors in determining the extent of how they go to get it back to 2%. And again, do it for the comments. Talking about recent ADP numbers, labor is still high, inflation is too high, NFP to come, right? So, you know, ideally mentioning that, hey, listen, it is going to be a data driven thing, right? Is still true. I don't think that has changed whatsoever. But is it definitely? I don't know. Is it? I guess the biggest thing is it needed as much or as forceful as it was before? I guess is the question. So, um, it was unanimous. The decision to raise was unanimous out there. I think they've opened the door and now they've raised more questions with it. And they said, it's data dependent. But thus far, besides the JOLTS data, which again is still quite high, right? All the data thus far has kind of justified it. Now, there was some great comments about how it looks like recession fears are over. There's more of a chance we won't go into recession than going into a recession. And again, we've been able to maintain there, but we've seen things like housing go there. We know that spending is down. We know that manufacturing is not great. So there's a lot of other factors out there. And I would say right now, the same things that drove, like labor used to drive inflation in the very beginning, we're not seeing it drive the same way now. So that's one thing that's a little bit different. The factors have changed. I think right now the biggest contagion is really more of a geopolitical spectrum thing than anything else, right? Buds, come on. Hold on. I'm almost done. Come on, give me one sec. One sec, buds. One sec, buds. There we go. There we go, buds. Sorry, he like stabbed me. I was like, he's giving me an opportunity to cuss fingernails. I was gonna take it. So that's the biggest contagion right now. You can see things like the yen. Is it doing much? It's down a little bit right now, right? You're seeing the pound up versus the dollar. So we're seeing dollar weakness kind of linked here, a little dollar weakness here, a little dollar weakness here, a little dollar weakness here, and a little dollar weakness over here, but really not much, right? We're seeing euro pound again. Is it European weakness? Yeah. I mean, ideally, for the most part, I think everything right now is just giving us more of a weakness sign than a strength sign, right? Because pound yen flat 6, right? Has like 170 pip ATR on a daily basis, and it's moved 7 pips. So yeah, not oops, hold on, not moving that much for what we've had. And that was all yesterday. Now today they did raise, and there's some comments that I want to go into right here. So everybody agreed that raising rates was needed. They're not pausing, right? They've number of views. Um, it's very clear that we're not pausing. She's very big on the not pausing, not pausing, not pausing, which means it's pretty much going to be factored in that they are raising. But talking about this, it's sensible to return to a more standard increment, right? I think she's meaning the 0.25. Some thought that 50 was appropriate, but nobody advocated unchanged rates. So I think we're going to have probably one or two raises for the euro because again they are behind, right? That's stop. One sec. They are behind the U.S. I mean, obviously the U.S. is 5.25 and they're at 3.75. So to hold cash, it's much better to hold it in a U.S. bank and get the 5% than it would be to, get it in the other direction, right? Um, so, but some of the things, this is one of a couple of things in here I want to bring up as well for the euro. Domestic demand consumption remained weak. They see divergence among sectors. Manufacturing prospects worsening. And again, we've seen crappy manufacturing numbers. And again, manufacturing is where we're going. Services sector is growing more strongly. Again, people getting out doing things. And again, we've actually seen that here in the U.S. as well. Services holding, but remember, services got beat up a lot more. People are still going out. People are like, hey, listen, I'm going to go to shows. I'm going to do this. They're getting more back into the habit of using services where we got away from all of that, obviously, during COVID. Yeah, remember COVID? It's still a thing, right? I think it still exists. I don't know. I don't know anybody that has COVID right now, right? Everybody gets stuff, but they're like, nope, not COVID, not COVID. So I don't know if COVID's completely eradicated or what's going on with it, but I don't know anybody right now that have it. This is an interesting one too. Government should roll back energy support measures, again, leading to inflation in the energy prices. Um, and then again, wage pressures have strengthened further. Again, we've seen it in the United States as well. But recent wage deals added to the upside risks, right? Renewed market tensions will be down to stop. You can get off if you hit it again. No more. So overall, concern coming out of the ECB, but at the same time, an agreement that, hey, listen, we need to really control inflation. We don't want to let it get out of hand. But they're already starting to, again, say not pause, but they're going to do sensible raises. And they got quite a bit to go, right? Compared to the US and a lot of the other countries out there, they are very, very far behind. And remember, they started late because of the Ukraine war. All right. So, what are we going to get next? We're going to get IV, PMI, and CAD. Not a necessarily big deal. Macklin is going to speak at 12:50 today. That should move the CAD around a little bit. And we're going to get monetary policy statement for the Aussie tonight. And then tomorrow morning, first thing, Swiss CPI. 0.2% is good on a monthly basis. We'll see what Jordan says about that. And then tomorrow, obviously, new month, unemployment. And again, the unemployment rate going to 3.6. We're seeing non-farm change only coming in at 180, which is, again, it was only supposed to come in 150 here, and it came in double. So the question is this ADP? I mean, heck, if it's here, is the big number going to be even bigger, right? Is this going to be a blowout here, right? Average hourly earnings staying the same, right? That's fine. But overall, the NFP number is going to be the big one that really decides what's going to happen next. Again, if they say it's going to be data driven and non-farm numbers are great, why is there any reason not to? I mean, if the economy is not being crushed and people are getting hired back and the job openings are coming down, right? And the unemployment rate goes up a little bit, is it really a big deal? What if it doesn't? What if it stays at 3.5, right? Because last time they were calling for it and it actually went lower. So if it goes back up to 3.6, does that really tell us much? Not really. Not really. But if this goes back down to 3.5 and this is a big number, like a 300,000, again, why not raise it, right? We know inflation is still too high. It's starting to work, but if we could get it back down to 2% faster, what does that mean in the long run? I think that's really the more important piece of it. All right. So looking at the VIX, obviously, after yesterday, the VIX took a big drop down. And then right in time for FOMC to come out, boom, it shot straight back up again in the market's tank because of it. Now we're holding a little bit high. If this was any other chart, you'd be like, oh my God, look at all the sellers here, here, and here, and then here again. But again, there's not a warehouse full of VIX. It doesn't work that way. Yeah, I know. Kip is, yeah, he's doing his ha ha ha. Unfortunately, he's on my lap, so he's right in, like, the mic is right there. So it does factor out a lot of things, like the birds most times. But unfortunately, where Kip is, it's not going to filter Kip out. I'm trying to put it behind his head, but he's not going for it. He's like, nah, I don't like it behind my head. So yes, he will add. He is the sound machine today. But that's where we're at with the VIX. Obviously, a little bit heightened today. Everything is in the red right now. Now, the dollar's kind of up from where it was yesterday. We were sitting back in here. And again, what did we see? Oh my God, they're going to pause. And we saw dollar weakness go in. But overall, once the Europeans came into the market today, it rallied up, came back down, and then rallied higher. And it is a little bit, I mean, technically it's in the green for when we closed yesterday. So it is seeing more of a dollar strength move today. I think when people really digest it and look at it, it's like, oh, it's going to be dollar dependent. And then you look out to the next big release and you see non-farm, you're like, ooh, they could release more, right? Overall, I think the short aspect of this yesterday was not surprising. I was really hoping they were going to say 0.25. They left it on the table. But when you look at the statement, I'm like, yeah, they're not pausing. They're saying that to appease the markets, but I think they're going to continue to raise, especially if they're saying every time they say, oh, it depends on the data. data's been good, right? The data's been really good. It's really, if it was a unanimous decision to raise this time, I don't know. If you don't have anybody to track, they'd be like, nope, that's it, we're done, right? We haven't had the weak fed people there, and again, it was unanimous. The weak fed people haven't stopped yet, right? They're still in that raise thing. So I feel like we got another one, but the market was like, oh, you're not saying absolutely. That means that means you're doing this. So I'm not really surprised by this whatsoever. And again, we've seen this when it comes in as expected. It was weak, followed by strength coming in after the fact. Now all the indices are not happy. Um, Indices are all quite in the red, right? Quite in the red. And again, is there anything out here today? I mean, unemployment claims came in as exactly as expected. So should we be? Is the world ending? Right? Oh my God. I mean, it's exactly. So the market had all the ability to kind of factor that in ahead of time. What other U.S. news is out there that's going to really kill us today? Um, Nothing. But yet everything is pretty deep in the red from where we closed yesterday. And again, seeing the dollar strength come back. People are looking behind the scenes. Commodities. Oil down there breaking 68. Love it. Natural gas down at 211, down 2.6. Gold and silver are up. Now, those kind of whipped the way we kind of expected and then whip back again. You can see that gold is trying to go negative, right? But it's still at 240 right now. People took this as a pause, like this is it. That's the end. And what people, I mean, again, the gold and silver market, kind of, again, I'm going to call it the bonds market, but the gold and silver market, the way that they're taking this is like, oh, you're going to be done right now. Inflation's going to have the ability to continue further. And I got to say, I'm in 100% agreement with them. I think not saying that you're going to do at least one more. Pal's comment, he made a comment about how I feel like we're more close to the end than the beginning. Well, yeah, you've raised interest rates from basically nothing up to 5.5. Yes. If it felt like we're just beginning to affect inflation after 5 percentage points, yeah, I feel like you're really not doing your job well. So, yeah, at the end of the day, him making a statement like that, people are like, oh, that's it, they're done. It's like, they said they were going to take it past restrictive and then hold it there for quite some time. The market right now, and again, I think gold right now and silver, based off the statement, I think they're absolutely right. If the Fed truly is at a point where they're like, you know what, maybe we'll pause it right now. We'll just kind of see what it's doing. I got to agree with as strong as all the other economical numbers are. I absolutely think this is the correct play. I think it should be up here right now. This 245 can make complete sense. And even with silver being higher, right? Again, silver has some industrial function as well, but based off the statement, the way that the market is taking it, if the Fed truly believes that it's time to pause, that we have done enough, this is absolutely right. If they are pausing, inflation is going to be allowed to grow. And we're going to have to do like in Australia where you pause and then they're going to have to start raising interest rates again. I still have no idea how people think we're going to drop 0.75 this year, but yeah, yeah. I think this is I don't want to say acceptable because I don't think it's true, but I do understand in reading that statement and the fact that they have balked a little bit. I think inflation is like, oh yeah, game on. So that this makes sense. So let's go look at the Aussie dollar. So there was news, and one of the things I said yesterday and warned you is look to see what the market does. The hour and a half before the news, and what did it do? It rallied up. So it's like, this is going to be a short trade, and I'll remove this, and you can see exactly what it ran into. There was your sell right up there, right? There was your sell. There was the news. It popped right up, grabbed that sell area, and then took off. And again, we got the close below, and it continued to push. Now, I'm willing to admit I'm wrong. I said it was going to come down to 66.34 on that downside. It didn't get that low. It got to 66.40, so I missed it by less than 6 pips because it's 34.6. So I missed it by what? 5.7 pips, right? But considering we rallied up and we grabbed this top level, and again, if you didn't have to use this old kind of level here, right? That was kind of the break. You could have used this level right here, and you can say just fine. It went well beyond there. You can see how it was doing all the basing in there, and then even on this side, it based again, based again, based again, based again. But kind of an easy grab. Like I said, we want to take, in any type of spikes, we want the extremes. There's your extreme levels. It popped right up to it very, very fast, and then just boom, all the way down. Big runner, 55 pips. And then went right back up again, and guess what it did, right? 1:30 European session, a little bit early on the European session, right? It grabbed it again, and it went down, and I'll show you. It's well past 1 to 3, just so you guys can see. It's provided numerous opportunities. 1 to 3 is only right there. So you can see, even where it is now, that's a 1 to 7. It went to a 1 to 9.7, right? Ideally, That's where you want, when this popped, ideally that's where you wanted to take your profit, and that was a 1 to 6.6, right? And you can see if I bring this across, it's done it not only here but also here. It actually touched there as well. Here, I'll bring this across to there, right? 6.6. So it did come out on the first run and it's passed now. So yeah, a lot of opportunity from that level. And again, looking for the basing in the old kind of broken up zones right there. Nice little trade. Okay. So a lot of movement out of this one. Now where we are now, we are in between the two kind of extreme levels, sitting right at that middle part. We do know we have some buyers in here. Overall, I think this one probably continues to go down. It's going to have to chop through and take both these levels out. Not ready for a reversal yet. If you guys wanted to do just like a simple fib draw on this one as well, whoops, you could take low to high, and you can see right around the 50%. You could draw something right there and say, hey, listen, there's my first target. If we're going to see a reversal this morning, most likely that's where it would probably come in at. It's got about another 15 pips. I mean, if we see a 1030 reversal today, that's where it comes in at. Again, gold is fluctuating back and forth. It was up 0.1. Now it's only up 0.3, 0.4. That's where it would come in, right? It has hit the 50 once already. I wonder if we go lower. I wonder if we go there and look for that. Again, no, Kip, stop. I'm wondering if that's what we look for the reversal. 35. Yeah, it's not horrible. This one's already been hit once, but it did have a nice little kind of confirmation test on there. So I would say there's probably buyers in both these. If you're looking for a 1030 reversal level, there is a level sitting right in there. Again, the profit, we are still looking to get out here. So I do think if this comes through, I think it probably bounces off that level before we hit. So this one maybe, I don't know, maybe this is more of a non-farm number, right? I'd really like to see strength though. I really feel like that non-farm number is going to be to the top side. That ADP number was just way too big. Stop. Yeah, buds. I don't actually mind this now that I'm looking at it more. We need some type of a catalyst to bring this back up again. Absolutely some buying in there. This could be an afternoon thing. I'd like to see this rally up. I'd like to, I'd like to be up here at the 66.98, 67 mark. It needs to go about 40 pips. It's daily ATR 68, 4 hours 28, so it's got plenty of time to get up there. We needed to reverse somewhere. This is a little bit near term. I think if we come all the way down and then try to go, that's just too much movement, right? That's 37 down and then 75 up. This would be like if we had a really bad miss on the ADP number, right? Like, it's 180. Like if it comes in at like 50,000, it's very rare that we get one that bad. Like something really, really horrible to where it's really, dollar weakness. That's what we would have down here. And I just feel with the number of the forecast and the data, I feel like it's better for a short. So yeah, I'd like to see it bounce off this level up. Again, if we get all the way down, maybe in the overnight it goes up, but then we'd be looking for a new level. It's not in the overnight. It's not going to go up 70 pips in time for us to turn and roll this one back over for a morning. So yeah, it's there, but those would I be looking for. Again, if there's a potential bounce off this one, that's 66.47. Again, it is confirmed. It is the 50%. It's hit one time already, so we may have buyers stepped in. It's obviously pulling back right now. I mean, if it wants to turn and go up, then yeah, we're lined up and set up for tomorrow. Okay. ASEAN. Here were the two levels we talked about. Again, profit target was tagged. Let's take that out. You can see yesterday morning we took one bounce here. We came back and based again. So we've had our 1, 2, and 3 hits. We dropped through, and then we came down. We kind of based right below actually the 61.8, and then pulled back up again to this old level, which was kind of violated. Although you would have had to adjust it to right there, right? That's more the near term basing level. And you can see we came up, grabbed it, and it's kind of going sideways. So right now, in looking at this one, I'm zooming it out just so you can get a better look on it. You can see really from like 33 to like 66. This is no man's land. We're trying to get out of no man's land right now, right? That middle 33%. There's a 786. It's not clean. I don't necessarily like that one. So the reality is this one I think has the ability to come all the way back down to the 88 mark. Just because we've kind of punched through all the decent, the big fib levels in here. Reversing this one and taking it from top to bottom now because we haven't gone through. You can see there is this basing level right here, right? At the 78, which is also just a continuation of this old 50 break level. So it's there. It's been hit one time, right? And again, great little short trade. If you're in the trade now, I don't think you're out yet. Let's remove this one. I actually didn't check this one beforehand. I looked at it and then forgot to check it. Let's see. 1, 2. No, not out yet. It got really, really close. 3, 2. Actually, we did get out. There's 3, 2. Now that I've actually here, let's just put it. I don't think it is out. Oh, yeah, it's right there. So no, it got pip-headed, right? The pipette's got it. But overall, that was a decent little trade setup. Again, having a basing level that's at 23. Those are the ones we would typically want to mark off. So you're getting a bunch of help. And again, it was kind of a Harry Potter trade. So Harry Potter break of the old 50, and the new one is a 23.6. As well as it was a drop, a base level, kind of pulled up a little bit, and then whipped its way back to the downside. So 3 reasons to take that trade. And again, it looked like the pipette gang got us. You're still about halfway. Again, lock in some profits on this one. Make sure you can't lose money on it. Again, it's the LCN. You should not get a gap above or anything like that. But just let it kind of continue its trail to the downside. But maybe you got out there. There was buyers there, obviously. But hopefully at this point we'll just continue to roll forward. So nice little trade setup, right? Nice little trade setup. All right, here's we go. So this was an interesting one. Okay, this is where we're at yesterday. So we drove up, and then all of a sudden, what do? We pulled back right beforehand, right? So we were trending higher, higher, higher. I love this part, right? I hated the fact that it was a 786, but we pulled, and then at 10:30 we reversed, and then we pulled back beforehand. It's like, oh, wait a second, this is going to be a long trade, and it was, right? It was a long trade. Now it did spike up, spike back down, and then go higher. It was just this. As soon as you saw this in, you're like, oh, it's going higher. The reality was, if you're looking to take this one, you could have taken a zone here. But on the flip side, we had marked this off yesterday. Had you taken this one for a short, either of the two would have worked, right? So drop this down to a 15-minute. You can see that it was a very, very quick spike right up at 14. It grabbed that level and turned. So had you taken the top side spike, again, the parabolic move up, right? You can see that the 1 to 3 is sitting right there. Okay, so you were out and immediately got out on the side. Had you taken the other side, had you taken the long position, again, played the retracement down at, no, stop. Can you tell I'm frustrated with him? There is your 1 to 3 right there on the top side. Right there, 3.2. So it didn't matter if you took the spike up to the extreme level or if you pulled back to the level of basing here, the last level of basing. Either one would have worked out just fine. Had you said, I'm not playing with the news, and you traded this side, again, same idea, same short. There it's confirmed. It slowed the news down, and your 1 to 3 was sitting right there, right? So it doesn't matter which one you took. If you took the top on the news, if you took that would be the parabolic retracement down. If you took the rebasement back up again, or you took just the overall kind of extreme level that it was a level with one touch, maybe two. I guess you could have said that one. And then again, news this morning at the European session straight back down again. Now we did miss it again. And you can see it has pushed all the way back down to the 110. So the euro has had a lot of trade setups in it, and it didn't matter how you traded it. You've had so many opportunities, right? You had 1 spike, 2 spikes, 3 spikes. I don't think this one hit. Oh, it did. And actually 4 spikes. So there's 4 trade opportunities in this one. You could have taken that one there, right? That one got out there. Move this one there. And that one would have been there. So whether you took this, and again, this one missed. And then it finally broke through. Okay. So 4 different opportunities in this one, and all pretty decent. This is a 33. This is a 25. Get down. I'm done. Go. Go. I'm not sitting on my lap anymore. That was your last warning. 4 opportunities, all good. 25s, 30s in the other direction. So easy to go. Right now, it's gonna hover around 110. I think this is probably the level that we're gonna probably stabilize and kind of punch down a little bit. We did have some basing there. 110 is a huge psychological number in this pair. Not as good as parity, but parity is very rare. 110 is a much bigger piece. So, and again, you can see here. Let's pull this off here. Let's go this way, and we'll run fibs from low to high. Right. You can see it also is a 61.8. So even more reason why people are going to be looking at this level here and saying, "Hey, listen, that's a good one." Right. You want to go in your crib? You can go in your crib. Then you stop. We're at that stage where we're like working on discipline with like yes and no. It's not going bad. It's not going bad. But yeah, it's definitely a fun experience to go through. But it's the last one, right? Euro pound. All right, so whoops, I just moved that. Euro pound. So yesterday morning, actually late last night. So we talked about this level getting a clean break of 88. You can see it came down at about 1 o'clock, came back up, and then last night at about 6 p.m. it did hit. I don't think it hit again. Did it hit your European? It looks like it just missed it there, depending on how you had your zone. Let's adjust this down to there and there. This one would have been pushed there, so much easier to see. Your 1 to 3 target is there, and there you go. Okay, so yes, this one hit and that one hit. So it didn't matter which one on this one. Again, we talked about this one not being gigantic. It was only a 5.5 pip, and again, 15 in the direction. You may not have wanted to take that one, but obviously, very, very simple setup. Huge push up, basing. Let me bring it back up to 30. We were trying to take this racetrack over, right? We had the basing there, and again, you can see touch. Both of them were fine. This one, unfortunately, missed by a little bit, so you got your entry there. But we're out now. With it pushing back down, we are getting back to the extreme level down to the 88.66. I wouldn't be surprised if we're basing here. You can see the European session started, excuse me, right here. So we've basically gone straight down. A little bit of a reversal at 5:30, and then just a continuation down. Would not be surprised if this kind of bases here, and then we start to push back up again. I think with the comments we've heard this morning with Lagarde speaking, let's see if she said anything else. Nah, just I think right now everybody's going to look at this and say, okay, we don't know what the pound's necessarily doing, but we know the euro is going to raise, and there's going to be another raise in there. But let's see, we are 50 or about 50 pips, right? 49.6 pips down. This has a daily ATR of 43. So we are beyond what the normal range is. We should see profit taking, and we have seen buyers step in here in the past. So I think this is a level. Is this a fresh level? Again, it was an old break, and then we kind of hit, and form the new base. So it's decent. I would say that the next big level is going to be down here. There's a little hiccup there, but I think this is the again in your shorts. I think there's one. Actually, this should be red, but actually, it should be like this. Oops, not that. It should be this with this. There's one level of profit, and then level of profit number 2 will be here. Okay, little hiccup in here, but I think those are your next 2 levels. I'm okay with this, and I think seeing this bigger zone down here. Oh crap! I did it again. I think this is probably the next clean buy. Is right down here. 87.27. Right? 87.27. Now, let's see. Is there any factory orders? That could give us something. Only construction to mess that one up. Yeah. 36. That may be a weekend position. I know it's Thursday. It could be a session tomorrow morning. I wish we had better news for the euro. I don't love this one for a buy here. I think this is a great profit target. And again, we're talking about a very small amount of pips here. This is another 6 pip thing. Oof, it's a little Just so we keep this in the context, very small zone. We're only talking about 6 pips for 18 in the other direction. Again, the euro pound is more of a proxy than anything else. This level's been hit enough times right now. If we come through, if you're really looking for something and you do like this pair and you don't care about the size and you're just going to position size it correctly with a larger order, again, 87.58.8, or if you want to make it 87.59, it's fine. Look for a break, a pullback, and a push down again. But I think, again, even if you use this as a profit, don't as an actual trade, I think it's a good spot. Euro yen. So euro yen. Let's see. This was hitting yesterday at about 5 o'clock. We had this one drawn. We talked about a pullback here at 8 o'clock. We had missed it a little bit. If you didn't get in, we said, hey, listen, a little bit too late. It did give you a pullback. So right around 2:30-ish, we knew that the yen was going to be involved. You can see it went to the full profit target, came down, and then obviously started doing its basing. We had another Harry Potter drawn over here, right? And if we extend that across, you can see no entry. Maybe an entry here. You may have gotten in here as it came down and based in 2 candles and came back up again. It actually didn't, if I have it drawn correctly, it actually didn't. Oops, hold on. Actually, you could have taken this 2 ways. You could have taken this one here. Again, there's your base, right there, right? You can see right there. I'm trying to draw it off of this base there. This candle, right there. So you can see, did not get stopped out. Or, and again, the 1 to 3 on that. Oh, crap, I did it again. My bad. 1 to 3 is there. So there was your Harry Potter this morning at 9:30. We're at 8. Or you could have taken it off the base level here. Right there. And you can see it did. And again, you have used this because this is where the base is. Right there. And again, it would have been the trigger here, not that one. I was just trying to draw it off of that one. Right there. Came down, based, plenty of time, pullback, and you can see both these actually entered. Actually, the first one and the second one both went to full. Hold on. Right there. Okay. So you can see both of them are completely out. So, Harry Potter from late last night, yesterday, and again, we talked about this coming back down. Use this level once it started the base. You're like, oh, heck yeah, let's go. And again, you could have used the bottom base or the top one, the more near term one. Either one would have worked fine. You would have been entered on this side, and both of them are good again. This is another 70 pips. This was a nice one. This one yesterday was good too. 80 pips, right? So 80 pips, you got out at 4:30, and then this morning, again, waking up this direction. Once you see all this in here, this is more of an early morning trade, but again, another 69 pips, another 70 pips. So 140 pips on the euro yen in the last 24 hours. Not too shabby. Pound dollar. All right, so pound dollar. We were really excited about pound dollar yesterday. We were talking about this one as being probably the one with what we were seeing. It had driven all the way up. So it went all the way high, and it ended up actually punching just a little bit through the top. So it's unfortunate. It came down to here, it spiked, and then it did give the short down. It just ended up going through the top, right? We were looking at this one and we were like, oh, how's it going to trail through the day? The euro turned out to be the much better one. It was a much better base than what we had here. I was really hoping this one would hold, but the way that the euro and the pound kind of shifted yesterday at 4, unfortunately, that's trading. So had you taken this one for number one, you did get stopped out. It did push all the way up back down just to make you angry. And then after that, you guys can see there was a base right here, and we had a touch in the overnight as a push back down. So my opinion on this one right now, if we delete some of this and change this around, again, this was the area we're looking at. And again, straight down, straight up, it was like, oh, come on, really? But it went really, really high. Right now, I think what you need to do is look for pullback levels. And again, low to high right here. You can see that obviously the 23 has gotten a little bit of help, but now it's kind of stabbed in it twice with a level here. There's nothing at the 50. So, looking at this one, I would say these spikes kind of make this a little bit more difficult. Say somewhere along here. Let's see. Can I see it better on a 15? I can, just a little bit. Yeah. We're going to do it off of there. Okay. There is a little hiccup there, but not as worried about it on the 30, right? It did make that a little bit bigger. I don't know how much is it? Oh, that's fine. 12. 3 is right there. Okay. And again, profit targeting should come in right here. Okay. So, again, not right now. It's a setup trade for later. Again, this would be dollar strength rolling back into the market. It's a short right below 23.35. I'm sorry. 125.40. pushing back down to that level right there. Okay. And again, we need the confirmation entry in there. We need to drop the base, the pullback, and then as we slice through. And again, it is the profit target is below, buyers at the 61.8. Okay. Pound yen. All right. So pound yen did not trigger, right? Yesterday we drove up, we drove up, we drove up, and then bam, the yen kind of strength rolled back in. And it just did the same basing. I wouldn't say that there's much of a trade setup. We knew we had buyers there. It bounced off them again, kind of peeked through. And again, the 50 was backstopped it. Look at all the time it spent just sideways, and now it's finally starting to tear down. So overall, this target is out. Those buyers are finally gone. We'll leave that on there as just a kind of a show. Right now, again, as this continues to tick down, we've now pushed down to this level, right? I guess they could have gotten that one. Maybe had some people stepping in, but pretty dangerous was what we had there. So this is where we're at right now. There is a little bit of buying down here at the 61.8. Just be cautious of it. For me, that's not a reversal level. That would be, hey, listen, I'm short right now. Where do I need to get my profit target out next? Look at the 61.8. There will be some buyers that step in and punch it higher. Ideally, this is still. Oops, sorry. It should be this color. No, not that color. That color right there. Still looking for that one up top. That doesn't change at all. Yesterday, you remember I said, hey, listen, the more this comes down, once this comes down into this level, right down here at this 78 buyers, I'm all over this one because now I don't have the 61 and the 50 as an obstacle anymore for this one. Because once it breaks through, we should be good to take that racetrack over. And again, this is 27 for 82. So again, another nice one with the yen involved. But right now we're not there. I do want it to come down. And again, we're looking for this top side. The 170.56 up to 171.52. Okay. Dollar CAD. Look at this chop. Pretty funny, right? I'll remove this. Right. What did it do? It drove down in time for it to go back up again. Now it didn't go back up and grab the level. It grabbed that yesterday morning at that 10:30 time frame. Had you mark that top off, there was a short here, but again, it just so many buyers up here. I would say if anything, you probably got front run. I mean, you could have taken it off this green candle and used the base like that, and you would have just barely triggered. Late last night, so you could have caught that one potentially. Right now, though, again, we're still looking for kind of this blue line here, right? Unfortunately, no real trade setup. Again, punch lower, punch lower. There, we know we have buyers in here, but it's more for a target than anything else. We're in such close proximity. Let's see on a 15. I don't know if I did this one yesterday or not. Again, this is actually not a horrible bounce, right? A base, punch and go, right? Up, base, pull back, pull the trigger. Do we have a short in here? It's a little deep. It's a little deep. A little bit deep. It's not horrible. I think we probably have one more bounce out of this, though. I think we have one more bounce here. It's a decent drop. A nice punch out of it. Yeah, I think we probably got one more there. Is that at a 50 or 61? Yeah, it's a 61. Yeah, we probably got one more bounce here. I wouldn't be surprised if this comes down, tags it, and goes. But when it does finally break through, again, it will eventually eat these orders up. Looking for that one next. Yeah, I'm okay with that one. But I do think this one bounces. So I figured, do I want to take that as a trade? 8 pips. It's going to depend what happens next. If this can turn red, it's going to end in a minute. And if we get a red candle down on the next one, I think there could be a decent trade out of there. It'd just be reversal fortune for the dollar. Let's go dollar Swiss. All right, so dollar Swiss. You can see yesterday we got down to that level and it really chopped back and forth. It is higher right now. The initial response was a dollar weakness, and then the dollar punched up higher again, and then came back down again and punched back up. So the good thing about this one is it did give us a base. So we can pull these old levels off now, finally take them out. We do have a level of basing down below, which gives us kind of a new extreme level. You can see anybody that tried to trade that 23, they took some heat. And then maybe they stayed in and were like, yeah. This is one of those like, you know, Jesus, if you make me not lose this trade, I promise I'll never do it again. And then I went this way, they're like, yeah, I'm gonna double down. And then they got stopped out. Right now, where we are, look at that. The 68 did come back to that level that we had talked about. Right yesterday, we were sitting here and it was at a 50. Now that we go all the way down, look at that. Now it lines up perfectly with 61.8. And actually, look at the level of basing right here with a little bit of a touch that's also sitting on the 50. So right now, I would say that these are two big deterrents to taking this one high, right? Looks like there. And again, looks like those two levels now have come into play as potential shorts. And again, we should be clear. If we can rally up higher, it doesn't look like there's much else in here, right? Doesn't look like there's much else here until we get to those two levels. But 89.08 and 89.27 are both levels. Again, at 50, 60.18. Basing, this one actually has a confirmation off of as well with a little bit of a front run. And if we can punch straight up in green, that should give us enough ability to run that back down. So it's oh, it's perfect. Yeah, it's 9.5. So just say 10 going down to here, right? There's 30. Totally good with that one. That's again, if this is all green, the profit should come in right here, right? So that's perfect. Okay, that works. This would be one of those ones. It's like, hey, let's get an alert on that one. It's going to be a red. Pop an alert on that one. Okay, nice little short on that one. Dollar yen. Look at this. Look at this bad boy. We talked about this, right? And it's funny. It did Harry Potter it, right? And then came back up and grabbed it again. So, yeah, mentioned yesterday that I like the 135. I don't know how much lower we can get, but ideally, there's really it, once we were breaking in here, there's nothing down to 133.62. So we had quite a bit of room to go on this one, and it's still just going to deteriorate and push to the downside. So we are at past the 78, so I'm going to pull that one off and see if that gives us any levels to the top side. Now look at that. The 23 is sitting right on 135. 135 candle is kind of large. Actually, look at the basing right here too. Basing with a touch. Right. And again, that's a 50 right now. What will it take to get that to be a 61? Ooh, look at that. Right into our level. So yeah, so that one could be pretty decent. Right now we're standing right there. Still that there's still the Harry Potter up here. This one is done. Yeah, I'm gonna leave that one there. Let's see if this one has something here too. Is there enough room? Oh, that there is. 30 for 90. Kind of a bigger one, but 28 for 86. All right, so that's what we got going here. We got one long, one short, and again, one level right here that we, depending on when this flips, pretty interesting setup right there at 135.97. I'm sorry, 91. It will be more in the middle of the range, so just kind of watch out for that one. Let's look at good old oil. Keep going. Now, again, how cool was this? Oil down at 63.65. So we talked about 67.26, and it did get broken late last night. The 14 mark was here. And again, it was later in the day, but we did break through. So that's great. Now we've pushed this one down, which we were excited about. We talked about our next target would be 64.91, and again, we did hit that one. We're sitting a bit high on it right now. Let's see. Right now, no, I wouldn't be surprised. Let's see. Did that come back up? Yeah, it got close. Yeah, I would say short right now. I mean, I don't really see a whole lot in this one to lower. Again, we knew that this was a great target, but not. Yeah, see, this is what we're dealing with right now. Right, the next touch is really down here. God, that's awesome. Next target, 66.44. Right? Next target, 62.44. Loving that one. Right? Um, yeah, awesome. Love that one. Keep going. And again, if you're short, stay short. Um, Not necessarily concerned about anything else. We blew through all these targets downside. And again, 1, 2, 3. This one hit exactly as it should. So yeah, looking good right now. And again, I had a decent base here. There was just a re-entry a little while ago. Right? Yeah, this confirm level right here. Base. And again, it's okay. It's not great. Confirmed it here. Shot all the way down. Came back up. Grabbed it. Yeah, I think this one comes all the way down. 62.44 is what we're looking for. Natural gas. There we go. From yesterday morning. Talked about 212 being the target. That got hit at about 12:30 yesterday afternoon. We popped back up. And again, this is a decent trade here too. Look at this. Look at the little gap that we formed in there. Look at that. Straight back down again. So, yeah. So I think the good thing about this is we know that from this level right here, we have, again, a nice big burst up in price. Um, Obviously the target yesterday was hit, but it looks like at this point, with that one basing where it did, looks like 2 is coming back on the radar. We've had 2 hits. This one is even lower. Looks like as this one fails, 1 to 3 is only right there. So, whoops, 309. There, 1 to 3 exactly. Not a bad little spot there. Again, that puts our profit target down here at 203. Right, 203. So not an incredibly bad trade there. Right, I like that one. Again, look for the base, the pullback, and drop. So going from 209 to 203, getting back to 2, buddy. Love it. And gold. Yeah, look at the gold craziness. So we had a top in there, and again, 1, 2, 3, 4, not a problem. Look at the Harry Potter. It based around yesterday at 4. What did it do? It spiked up and it came back down and grabbed it and then took off and it was off to the races. Now a lot of this came in late last night, right around that 18, the 6 p.m. mark. I think this one is completely justified. So let's pull this off. Like I said, analyzing. Taking a bunch of these old trades off. So we're above it now. That was good. That was good. I'm gonna take that one off. We have had a trend change here. That's good too. I'm gonna leave this. Let's go. I'm gonna go here to our current trend. Let's see. Yeah, look at that. It pulled right back to a 50. That's a green. That's not only a gap, but a confirmed gap. Yeah, it's doing the right thing. I mean, on a purely technical basis, look at that. The gap came up 50%, level of basing, and then boom, it took off right this morning at 9:30. So, yeah, I mean, I hate to say this, but really until we get up to that 2080, I mean, I guess there's a little bit of a hiccup. I mean, you can see the 23 didn't it barely slowed it down. Excuse me. There's a little bit going on right there, but like I said, I think this can get back up to 280, 2080. Um, yeah, I mean, maybe this is where we turn. Again, there are sellers in here, but at 10:30 in the morning, will this give us a reversal from the opening print? It could, but if it doesn't, it starts the base in here. Look for 2080s on the top side. So, yeah, yeah. 18. Funny, this one. It's interesting. Gold did not have as much of a move as I thought it would just from that release. I mean, it's about $15, but it's all right. But not tons. It's crazy, kind of just how it used that Harry Potter trade. right? Using that level of risk, right? There's your bottoms, there's your tops, there's your bottoms. So, yeah. And Harry Pottered out at 3 o'clock. Yeah, and I think based off the comments, I think it makes sense. I did the right thing. Both a technical and a fundamental level. So that was decent. All right, silver. Damn, I missed it by a little bit. So, talked about this one taking off, right, in the overnight. Look how close I missed that by. I said it was going to go to there, right there. Look how close I missed that by. It was right there. So close. So close. So yeah, I mean, obviously high on the curve. It's been here a few times, right? We know it's again, it's been there. It's been there. This is a big drop down. So yeah. Um, I think this one is probably. Yeah, see, this is doing the same thing. It's there. This one also has the same. Right, it's got the same level right there. Right. Are we going to see a 1030 reversal in silver? Kind of line it up. We do have a bigger level of 206.05, but this is kind of lining up right now. It's not horrible. Again, looking for an opportunity in silver. Looks like 2581. Here, we'll just make it 2582. Looks like 2582 has a small level of sellers in there. Could be worse. What? Sorry. All right. Yeah, I mean it's a potential reversal. It's 1030. It's all right. Again, if you want to get in the silver market, it's done nothing but pop straight up from the 930 open this morning. And again, it drove straight down into the open for popping straight up. This would be a level where it turns. It has been here, so it's not necessarily fresh. It does have the sellers that we like. It's a two top base on the 30-minute. So I do like how it tiered down. I do like how it came up and retested that area. So it's a setup. Again, if you want to get in silver, again, silver is one of those ones that you need to watch out for. Definitely much more speculative market versus just pure supply and demand. But yeah, I mean, it's got a potential reversal in. And right now, I can tell you right now, based off of how this has taken off since the open today, if you took kind of this smaller style of risk, 1 to 3 is only sitting right there. You know, profit needs to be taken before that level, right? Needs to be taken before that level. So you got room for it. It's there. Again, if you like silver, not everybody likes silver. So, you know, yeah, is what it is. What do we got here with Apple? Apple's got all kinds of drama. Tesla missed yesterday. Just by look at that. Look how close we missed on that Tesla move yesterday. And again, we're on bottom side with buyers. So yeah, probably reversal. Yeah, everything's pretty deeply in the red. VIX is just taking off. Is the dollar doing anything? No. It's up 0.13. Right? It's staying within that same range. But yet the world is collapsing. Let's drop it down 15 minutes. Let's see if we would have had anything this morning. Obviously a downtrend 8:30, 9:30, kind of base for 30 minutes. Not really. I mean, you would have looked at this saying, "Here, there's your confirmation." Maybe you got. I'm gonna say maybe you could have got in this one around 9 o'clock. Both the next two missed off that base, so you could have got short this one. And again, short in the overnight, it based and then started to pull back before the open, and then it kind of stalled there. So I'm not gonna draw this one out, but yes, you could have gotten short at the open today. It wasn't a level as it was pulling back. Um, there was a few confirmed levels in here. Obviously, this broke through down, down, down. Wasn't there yet. No confirmation off this one. This 815 never confirmed. It's close, but it didn't confirm. So yeah, and then the punch through. So you could have probably traded this one. I'm not going to draw it. It did miss it slightly. You would have had to get into this one at 9. Actually, 8:30, 8:45, 9 o'clock all hit. And it looks like the 915 again holding firm, again being green, and this one Oh, actually, you know what? That one did hit. It did hit. Yeah, it did hit. All right, so I will draw it then. I didn't think it did. So, yeah, okay. So opening, you could have got it in the open then. I lied. It's out. One of three is right there. So you're out in the first candle. Okay. I didn't think it actually hit, but it actually did hit the zone. So yeah, it did. Look, that's 315, so it's beyond that. So yeah, okay. So it hit. Um, decent base. NQ. Let's see what we had in NQ. Um, this one's kind of the same, but I don't necessarily like that zone. So in looking at this, right? Let's see. If you're looking for a decent level of basing with a pullback, there was a little zone there, but that's not really a great zone. It did hit it. 930 did definitely not hit it. 915, but I don't really like that as far as a confirmation goes. It didn't really leave that area, so as much as like I said, I'm not going to cherry pick this one and be like, look, here's another one. Not really. This is not really enough basing with pullbacks to really do anything. Three little doji candles in a row. Not interested in that one. So yeah, it went lower. Again, it's shooting for, again, no surprise that it's hitting 13,000 and having some problems right now. Again, it's 1030 hitting 13,000. If this one finds a base here and starts to push back up again, would not be surprised. Looks like it was established, cleared, established here. Probably able to run back up to 13,090. So again, would not be surprised if this reverses, but not an opening print. Funny why I'm using this old Harry Potter. 830. All right, did nine. Yeah, let's pull this off. Let's see. If there's our basing level. Did it tag it? No, it didn't. I would have had to use the whole base of the red. Very similar to the ES, depending on how you drew this one. If you went like super conservative and just used that area up there where the base was, you wouldn't have got it, got the entry. Had you used the entire red and said, "Hey, listen, there's the true base. The green was inside of it, and the red, basically the red closed exactly where the bottom was to form that base." Then you would have got it entered in today. It obviously is past 1 to 3. So again, ES was one. Um, NQ definitely not. YM, it's debatable. You guys could have got into this one depending on how you drew it. If you went super conservative, or if you said, hey, listen, the bottom of the body here is the same as the bottom of the wick that defines the actual base. And it is confirmed and tested a little bit higher. As well as, again, you got to love this right here. So ideally, if you said, okay, I like that, but let me do it off this piece right here, right? It did come back up and touch it because it opened down here. So it had gotten some space. So yes, you could have taken this one as well. I'll do it off the big risk level. It doesn't really matter. 1 to 3 is there. Off the big risk level. Had you taken the smaller one, you're good. So it looks like 2 for 2. And Russell. Um, there's my Russell draw. I got pretty close. I missed this one by just a little bit also. I said, hey, listen, interest rate rise, bad for the Russell. Now, everybody that was trying to get short, it spiked through and then it collapsed back down again, which again, it was because everybody was trying to get short. So you got to short, you got to stop out all the shorts. And that's why it burst higher. I missed it by just a little bit. I missed it by, let's see. I said there. How much did I miss this truly by? Well, I guess it closed. I was almost dead on, right? Because when the candle closed, it missed it by just that little bit. Again, I haven't moved this one. You can go back and watch it from yesterday. Um, I got really close. I got really close. Not too shabby, right? And again, if you don't believe me, that's where I put it. Go watch yesterday's episode. They're all recorded. Pretty close. Pretty close, right? Where does this one go now? I think we talked about this yesterday too. Let me take some of these off. We're playing with all this right now. Let's go back up to 2 hour. So we're through there. 1700 is the last buyers there. There is a base here. It's pretty deep though. It's funny, this Harry Potter here, it did eventually work, yeah. It's funny, you go to like a 2 hour and all these little 15-minute trades are like, wait, why is that all stretched out? Did that work? It's like, yeah, on a 15-minute. large time frames, it's like, oh god, there's so much there because there's so many different little. Oop, cancel. It's like you're deleting all the good trades. Yes. Just to keep the browser clean. Don't need 800 things on there. All right. That trade was good. Good. Pull. Oop. Look at that. On the 30-minute, it looks like I hit it dead on. Right? On the 30-minute, it looks great. But we drew it on the 15. I missed it by just a little tiny bit. Funny hair powder off that. Go a bit lower, but you know what? I'm gonna pull that one off. I don't care about that one as much. People will use the near term. So if we find our bottom here, it looks like we have a little level here at the 61, as well as a little confirm level right here. 1740. Yeah, I'd say right now, again, 1036. If this one comes down and grabs 1700, not surprised. 1700 is going to be a huge psychological level, so watch out for that one also. Do I love it for reversal? Not so much. Would this been an opening print trade? No, it just went sideways. It was no confirmed level. You need to pull up just a little bit more. So ESYM, you were good. NQ, definitely not. Russell, definitely not as well. So 2 for 4 as far as entries go. And again, 2 for 2 on the entries as far as full profit goes. So again, another decent morning for opening print stuff. All right, that's it for today. Let's go ahead and get our drawing underway here. I will give you guys a 6:30. Again, it only counts when I'm only on this tab. So obviously the contest has been going for longer than 6 minutes. It's just that's, you know. Ugh. Looks like Asher's home from school today. All right, there we go. All right, let's see how it works. All right. So Debbie must have only read chapters 1, 2, and 3, not chapters 4, 5, and 6, right? Right. She played the day one well. Yesterday, I don't think she was aggressive enough, but she still managed to pull it out. Today, for all the marbles, I feel like she's going way too conservative. According to the Neuro ebook, way too conservative. But let's see. Am I the fool today? Did she take this one? Winner of today's drawing is nope. Ernest took it. Right. Ernest took it. Debbie, you were up. Let's see. The first day you were up, I think you only did one ticket, so you were up 25 pip chips. Yesterday, I think you went with 3, right? But you were going for 100, so you got 70. So you were up 95 pip chips, right? Today was for 250, so the risk was there. So at least go with like 5, right? At least if you bet 5, right? It'll cost you 40 pip chips, but you're making 200. Even if you did 6, right? If you did 6, your odds were basically 50-50, right? 50-50, right? If you would have done 6. Actually, yeah, if you had done 6, it would have been 50-50 for Debbie. So the statistics would have been on your side. And yes, you're risking 50 pip chips, but you were going for 250, right? So you see, right? Again, this is why Neuro is an ebook, right? Downloadable PDF. That's all you need. So, all right, let's go over here. Ernest is going to feel very accomplished today. I'm going to give him his 25 pip chips. He stopped the 3-peat. I think Debbie got him last week anyway, so it all evens out in the end. But yeah, so I mean, the girls dominated this week. They ended last week. We'll see who ends it up tomorrow. If Ernest takes it or, again, if Neuro does it. I do. Yeah. Yeah. It's one of those traps, Neuro. Yeah. Give me your address and email address, and I'll give you that ebook download, right? All right. So, again, tomorrow, extremely important morning. It all kicks off at 8:30 a.m. Again, I think the CPI could be a nice little dollar Swiss trade. Look for a reversal coming through. This non-farm employment change, if it's really, really high, the question will be, if this comes in at 300, is the market going to take that as, yes, everything is great and be positive? Or if they get like a 300 call, Are they going to take this as holy crap? They're going to raise interest rates again. They're not actually going to pause because it's just too good. Will be a deep red day. Maybe it comes in as expected, and it turns out as a feel good Friday. We have that option as well. So anyway, that's it for today. Thank you for joining me. I will catch you guys tomorrow morning, 9:30 Eastern Standard Time, and I'll see you then. Take care.